There is a machine in this country. It does not make cars. It does not grow food. It does not heal the sick. It makes money from money. And it has figured out how to turn almost every part of your life into a monthly payment. Mortgages. Car loans. Credit cards. Student loans. Medical debt. This is the financial industrial complex. And today we are going to look at how it actually works. The financial industrial complex is the alliance of institutions that profit from the flow of money and debt through the economy. It includes Wall Street banks, asset managers like BlackRock, Vanguard, and State Street private equity firms like Blackstone, KKR, Apollo, and Carlyle, private credit funds like Ares, credit rating agencies like Moody's, S&P, and Fitch, lobbying firms, revolving door regulators, politicians who depend on campaign money, media outlets that depend on financial advertising. It is not a conspiracy. It is a structural alignment. Each piece reinforces the others. And the result is that the rules of money are written by the people who profit from money. The financial industrial complex does not just provide loans. It converts human needs into financial products. You need a place to live. They sell you a 30-year mortgage. You need an education. They sell you a student loan. You need a car. They sell you an auto loan. You need healthcare. They turn it into medical debt. You need to buy groceries. They hand you a credit card. Every basic need becomes a contract. And every contract becomes an income stream for a financial institution. Here is the part that schools usually get wrong. Most people think banks take deposits from savers and lend them out. That is not what happens. When a bank approves a loan, it creates new money as a number in your account. That money did not exist before the loan. The Bank of England confirmed this in 2014. They said, quote, "Commercial banks create money, in the form of bank deposits, by making new loans. About 97% of all money is bank deposits created through lending. Only about 3% is physical cash. So the money supply expands when banks lend. And it contracts when debt is paid off or written down. The financial industrial complex needs a steady flow of new loans to keep the system running. That is why it is always looking for the next borrower. Let me show you how the wealth extraction actually works. Take a typical 30-year mortgage. $400,000 at 6% interest. Monthly payment, about $2,400. In the first 10 years, the borrower pays a total of $287,784. Of that, $222,527 is interest. Only $65,257 actually reduces the loan balance. After 10 years, the borrower still owes $334,743. That is 83.7% of the original loan. The bank collects most of its profit in the first decade. If a crisis hits around year 7 or 10 and the borrower defaults, the bank has already captured the bulk of the interest. Then it can foreclose, take the house, and sell it again. Amortization is not just a payment schedule. It is a wealth extraction schedule. Now look at the timing. 1987, stock market crash. 1998, long-term capital management and Russia crisis. 2008, global financial crisis. 2020, COVID crash. 2023, regional banking crisis. Financial instability comes in cycles. And mortgage lenders collect most of their interest in the first 10 years. So when a crisis hits after a decade of payments, the lender has already won. The borrower loses the house. The lender keeps the interest. Investors buy the distressed debt for pennies on the dollar. And the cycle starts over. After 2008, regulators tried to make banks safer. They forced them to hold more capital. So risky lending moved outside the banking system. It moved into private credit. Private credit is lending done by non-bank firms. Apollo, Ares, Blackstone, KKR, Carlyle. As of 2026, this market is about $1.7 trillion. The loans are not publicly traded. There is little transparency. The funds are highly leveraged. They promise quick withdrawals on assets that cannot be sold quickly. And increasingly, these products are being sold to retail investors who do not understand the risk. The Financial Stability Board, the IMF, and the Federal Reserve have all warned about private credit. But it keeps growing because it is profitable. Americans owe about $18.8 trillion in household debt. But ordinary people do not own that debt. They pay it. Mortgages get sold to Fannie Mae, Freddie Mac, and mortgage-backed securities investors. Auto loans get packaged into securitization trusts. Credit cards become asset-backed securities. Student loans are mostly owned by the federal government. The people paying are not the people profiting. Debt is the raw material. And the financial industrial complex is the factory. The financial industrial complex does not just profit from the system. It shapes the rules. Wall Street spends hundreds of millions on lobbying every year. J.P. Morgan alone spent $3.6 million on federal lobbying and $8 million on political contributions in 2024. The big banks increased lobbying spending by 12% in 2025. After the 2018 Dodd-Frank rollback, the threshold for enhanced bank supervision was raised from $50 billion to $250 billion. Less than 2 years later, Silicon Valley Bank collapsed. Then First Republic. Then Signature Bank. The same institutions that lobbied for weaker rules were bailed out when the rules failed. This is the cycle. They privatize the profits. The public socializes the losses. And the biggest banks get bigger. Let me make this personal. A typical household earns $5,000 a month after taxes. Their mortgage is $2,000. Their car loan is $600. Their credit card minimums are $300. Their student loans are $400. That is $3,300 going out before food, gas, utilities, or anything else. And almost none of it stays at the local bank. The mortgage goes to Fannie Mae or a mortgage-backed security investor. The car payment goes to a securitization trust. The credit card payment goes to a credit card asset-backed security. The student loan payment goes to the federal government. One household. Most of its income. Routed to the financial industrial complex. I am not going to tell you to never borrow money. Sometimes it is necessary. But I will tell you to understand the machine you are feeding. Pay off credit card balances every month if you can. Avoid 30-year loans if shorter terms are manageable. Do not treat your home equity like a piggy bank. Build cash reserves so you are not forced to borrow in a crisis. And teach your kids what the schools will not. The financial industrial complex profits most from people who are confused, desperate, or overextended. The less debt you carry, the less of your life becomes a payment. In the next video, we go from finance to war. We will look at the military-industrial complex. The weapons makers. The defense lobby. The revolving door. And how the same machine that turns your life into payments also turns global conflict into profit. Subscribe and hit the bell. This is Boone. Thanks for watching. Picture first visuals with text around main image. Pick audio format.